Today we're going to look at state income tax. The other day we done our federal income tax where everything was figured on your paycheck, monthly, biweekly, weekly, however. Your state income tax is a little different. It will be done on what they would call an annual salary or what you make per year, you know, estimated basically kind of what you would make per year. And so your exemptions, which you and federal was called your withholding allowance, is basically your dependents. You're going to get so much off for certain things, kind of like your tax free money as we did earlier. Okay. So our formulas are, first of all, we're going to take what we make a year, our annual gross pay, take away exemptions. How much money am I getting basically tax free? Then we're going to take that number, that answer, and multiply it by the tax rate. Okay. So I've got a little table kind of set up. And again, I believe these numbers right here have kind of changed over the last few years. But I just kind of keep these because they're nice kind of round numbers to work with. But it gives you an idea of the process of how to go through and do your stuff. Okay. So Tony Ramon's gross pay for a landscape designer is $44,750 a year. The state income tax for him is 3% of his taxable wages. But if you'll notice, he gets some exemptions. He gets an exemption for himself, and he gets one exemption for his child. How much does Tony's employer withhold yearly for his gross earnings for his state income tax? Okay. Now, if you'll notice at the thing, it says single, married, and each dependent. Okay. So if he has taken an exemption for himself, he's classifying himself as a dependent, so he's going to get $2,000 off. He's got one child. That child is a dependent, so he's going to get another $2,000 off. So he's going to get a total of $4,000. I like to call it my tax-free money, but they're really for his exemptions. Okay. Now, what we want to do is we want to take what he's making, $44,750, and we're going to take away this $4,000. So we're going to have $40,750 that is going to be taxable. Okay. Now, our last one is to take that taxable amount of money, which is your $40,750 times his 3%. That's what his tax rate is. So $40,750 times our 3%. He would have to pay $1,222.50 for state tax. Now, that's a year. Okay. If you want to know how much you're going to have come out of your paycheck, you just divide that by ever how many paychecks you are getting. Okay. So if I'm getting 52 paychecks, I would divide that by 52. Now, how do they know I'm going to make $44,750? My plant might have to close down. They might do some short timing. I may work a ton of overtime. Some people take that into adjustments, as they go throughout the year, but it will all be figured at the end of the year. So the government will figure how much state tax that you were supposed to pay and how much you've actually paid in. If you've paid in more, you'll get a refund. If you've paid in less, then you will have to send them some extra money. Some people will go in and have a little extra tax taken out, like $5 every pay period, in case they're working some overtime or something. And if you've overpaid, the government sends you a check when you file your taxes. Okay, so people have kind of figured out how to kind of make adjustments for that, because you can short time. You can work a ton of overtime. That's not included in this. This is just kind of like his straight time pay. Okay, in example 2, I'm going to do the same thing. His gross pay is $23,760. Okay, that's his yearly pay. He's got 3 dependents and he's married. So he's going to get an exemption for married and he's going to get $2,000 for every dependent that he's got. And his tax rate is 4%. Okay, so for my taxable wages, we are going to have to figure out how much we get to take off. So we're going to start with $23,760. He gets $4,000 for married. He's going to get 3 dependents, and each one of those is $2,000. So 2,000 times 3 is 6,000, plus another 4,000. He gets to take off $10,000 because we have our 4,000 plus our 3 times 2. So there's that $10,000 he gets to take off as basically tax-free money. Okay, so he's got $23,760, take away his $10,000. So he's got $13,760 that is taxable. Now then, take your taxable amount, $13,760, and multiply by your tax rate, which in this case is 4%. So he would have $550.40 a year that will be coming out for state income tax. Okay. Now, like some cities have a city tax. So if you work within the city limits, you pay a city tax. Some people have some other little taxes that come out as you go along, but your state tax, this is basically how you figure it. Make sure you're subtracting your allowances and you're figuring those up correctly. And then take what's left after you subtract your allowances or your exemptions and then multiply that by whatever state. Now remember, this is a year's worth of taxes. Okay. You'll have a few problems to practice with. Make sure you are writing stuff down, jotting down notes, questions that you will want to ask me when you come back the next day. Okay. So good luck.